China is set to increase its defense spending by 7.2% to 1.67 trillion yuan. That translates to $232 billion in 2024. That's according to a budget report released by the Ministry of Finance. In the government's work report released Tuesday, Beijing vowed to resolutely oppose separatist activities aimed at Taiwan independence and external interference. China's 2024 military budget expansion follows a 7.2% increase last year, a 7.1% spike in 2022, 6.8% increase in 2021, and finally a 6.6% climb in 2020. That's according to official data. The budget in China is second only to the United States, though some unofficial estimates suggest the scale of Beijing's military spending may be even larger than officially claimed. Meanwhile, markets are mixed today in China, just as the country projected a GDP growth target of around 5% for 2024 and announced the issuance of ultra-long special bonds for major projects. Adam Hancock is in Singapore for us, and he has more on the increase in military spending and what this means for the Chinese economy.
Well, this was the first work report given by Chinese Premier Li Qiang at the annual National People's Congress in Beijing. It's effectively a report card focusing on how the Chinese economy is performing and outlining plans for the year ahead. Now, this year's speech was closely watched given the perilous state of China's economy. The country's post-COVID recovery is stumbling and the property sector continues to slump. The headline from this speech was a growth target of around 5% for 2024. That's similar to last year's target, which was achieved, but analysts are less certain if that can be repeated this year. That's largely because the economy was coming off a lower base at the end of 2022, following years of pandemic restrictions, meaning growth was easier to achieve as the economy reopened. To try and boost the economy this year and match that 5% target, Premier Li said China would work to transform the growth model in the country, although limited details were revealed as to how exactly this would work. Spending on defence will also be increased by just over 7% this year. That means this is the 9th year in a row of higher military spending and comes amidst increased tensions with the US and some of China's neighbours. A separate work report also referenced relations with Taiwan, saying that Beijing would be firm in advancing the course of China reunification. Now, this is significant as it drops any mention of peaceful reunification, which has been used in previous reports, and comes just months after Lai Ching-te won Taiwan's presidential election. Now, one of the highlights of the National People's Congress is usually the press conference held by the Chinese Premier. It's a rare opportunity to put questions directly to a senior member of the Chinese Communist Party. But this year, that press conference has been scrapped, and it's sparked concerns that Beijing is increasingly looking inwards and becoming more and more isolated.
For more on this now, online trading brokerage DTC chief analyst Jamil Ahmad joins us now live from Dubai. Thank you for being with us, Jamil. Right, so China vowing to deter Taiwan separatist activities. How likely is a conflict at this point, do you think? But also, what would a conflict mean for the Chinese economy and for global markets at the same time?
Well, financial markets overall, Ludovica, are not pricing in this risk at all. If you look at what's happening with financial market activity right now, world markets are very much close to new record highs or making new record highs. If you look at the likes of the Japanese Nikkei, the S&P 500 in the United States last week. Overall, world markets are enjoying this news over hopefully low interest rate policy to coming into later into 2024. That's really what's supporting economic activity on a market level. Of course, as a world economy, we know we have many challenges. The UK's in a technical recession. Japan's just entered a technical recession. They're not alone in that field. Generally speaking, if there was some sort of hypothetical conflict that did break out, and again, we never say never to anything in international finance, especially considering what's taken place over the last 5 months or so over the Middle East region, then of course that would be implications for downside risk for economic growth, or specifically for market volatility. It would relate into a risk off atmosphere, which is basically where investors do not add risk into their portfolios. You look at safe havens like gold and the Japanese yen, where investors would not be so encouraged to move into world markets as they have been over the past 5 months or so, considering how long this rally has been persistent for.
It's really, really interesting what you're saying. Then the Chinese economy has obviously been showing signs of slowing, and a GDP growth of 5% this year. Well, it's a lot in absolute terms, but of course, much less than Chinese standards, right? What do you make of this figure?
Ludovica, you're then completely correct. Absolutely. In those terms, it's very strong headline growth if you look at the world economy overall. But if you look over what we were expecting for the Chinese economy, if we were doing this interview 10 years ago, we were looking at double-digit growth, 10% growth. So we're now pretty much half of this level. One of the benefits on a world economic expectation, Ria, is that Chinese stories and Chinese risks are seen as very isolated and idiosyncratic to China at this moment, considering what's happened in the real estate market and other sectors of the Chinese economy. Overall, though, the Chinese economy does still account for as much as 18 to 20% of world economic activity. We look at exports, and every economy is very much reliant on exporting and importing goods inside and outside of China. So if the Chinese economy does slow down, this suggests that we will have slowing demand for our products no matter where we sit, and that is then therefore a subsequent risk to our own economic activities.